Chamber of India and SME Export Promotion Council and SME Investment Promotion Council. It's my immense pleasure to welcome Sri A.K. Vinod, CGM MSME Department of UBI, Union Bank of India. Mr. Vinod, welcome at this important SME Finance and Investment Summit, which is focusing more on the SME perspective. My dear friend, and the banking sector having the more than at least 25 years, 30 years experience, Mr. Nadia Sood, who is going to speak on the how SME sector can explore more on the cash flow based lending, particularly for their financial need. Mr. Arsul, welcome at this important webinar. Very shortly, the SIDBI GM and Ms. Nadia from the Credit Enable will be joining us.
It's a very deep honor to be joining such a venerable panel. Are you able to hear me?
Yes, we can. Yes, you are audible and
okay, fantastic.
Yes. Why?
Fantastic. So thanks very much for having me. My name is Nadia Sood. I'm the CEO of Credit Enable. I'm going to share a few slides just to tell you a little bit about what we do. And I do a little bit about how we try to help that. We're really a partner to SMEs and to lenders. We are deeply committed to the SME sector. And in fact, we're just awarded the Most Responsible Digital Innovator of the Year prize by the IFC and the World Bank this past year for the work that we do on financial inclusion and specifically with SMEs. Sandeep, you could move to the next slide. We want to be the most efficient marketplace for everyone in the world who needs SME loans or for lenders who want to offer those. And our vision is really a world in which every SME gets access to affordable credit when they need it to grow. Now, I'd like to share a global perspective with you on how hard it is for SMEs everywhere in the world. India is not an exception, and you'll be potentially shocked to learn what happened. So what we do is we provide actionable, objective advice and credit education to SME borrowers to help them navigate the process of securing the loan that they need. This includes also letting them know if they're not going to be able to achieve the loan at the time they want it, and the reasons why they won't be able to achieve it. And we do that before we actually place an application into a lender, which means there is no hard pull on the credit score of the company, which allows the company not to have a derogatory credit report, despite that we're interacting with them. And then on the other hand, we deliver the best loans and the best at the best cost and on the best terms to the company. The problem is a very large one in terms of SME credit globally. Sandeep, if you could share that slide about the global situation, that would be great. You will be surprised, perhaps or not, to know that all of those of you in India who are struggling with achieving the financing that you need are not alone. In fact, $8.1 trillion of SME loans are available every year on bank and NBFC's balance sheets to be lent, but $4.5 trillion of that never gets dispersed to creditworthy SMEs. And I'm not talking about unbanked, informal institutions. I'm talking about formal, banked SMEs. The reason is because it's very expensive and for lenders and borrowers to transact. You heard a lot about documentation and things like this. The interest rate ends up being quite high for borrowers because when they don't get a loan from a formal financial institution, they tend to rely on family and friends, money lenders, all of whom are going to charge substantially higher rates. And the process is very much more lengthy. So on average, and I'll tell you in the UK, which is a highly digitized market, we still are not able to achieve reasonable size business loans in under 8 weeks. So we're not that much more advanced, and SMEs are squeezed everywhere in the world. So it's really time for some rapid technology and disruption in the sector. Banking sector in India and globally that have built large technology and risk platforms have interacted with banks. And
so just to give you a, I've talked about the global issues, how we help.
I just wanted to talk a little bit about some of the initiatives in India that are going on that I think are going to be very helpful to SMEs. So Sandeep, if you just go forward to the digital experiences, the digital section, to the digital section. So there's a whole bunch of things that are happening in India right now that I think are going to bode well for SMEs in the long term. And whilst they may seem a bit onerous at the moment, I think the harmonization of some of these things is going to really help SMEs be able to portray a data set around themselves that will allow lenders to gain confidence in both the businesses themselves, their ability to generate wealth within themselves consistently over a period of time, and also to take that data and use it to make good underwriting decisions. So, for example, the GST regime, which I know has come with lots of hiccups, but it actually creates a framework within which a lender can actually understand roughly what the revenues are that are really coming into the business and start to really do cash flow based lending. And some of the more innovative banks and NBFCs in the country are already doing this, and they rely heavily on the GST returns, which are quite real time, in order to make lending decisions. Now, the problem for an SME that doesn't comply with this regime or doesn't file their returns on time is that, again, it becomes more difficult for a lender to underwrite them. So getting yourself sorted on the GST front is going to be increasingly important, but also increasingly beneficial to you. And it also comes along with a lot of other benefits in terms of, lowered logistics expenses because you have harmonization again across states, and et cetera, et cetera. You could move forward, Sandeep. You don't have separate tax regimes in separate states. There's just one tax regime, and you don't have to pay different tax bands depending on different things. So of course, internally for you as an SME, that also, you may be thinking it's going to increase your compliance burden, but it actually does reduce it because it standardizes things. So you don't have to have so many different types of paperwork being filed in so many different places. The primary benefit of this, as I said, though, is for the lender to be able to truly understand your cash flow in real time and give them the comfort that you are going to be able to repay that loan, especially if you do not have an existing relationship with them and they have no track record of understanding your business model, understanding you as an entrepreneur, or understanding your performance historically. This is an objective measure they can use in order to underwrite new customers. And that's a really great neutralizing effect because it means you don't have to rely on a previous family relationship with a lender. You can be a new entrepreneur and still secure a loan. The other very fundamental thing that has been alluded to and spoken about by other members of the panel is the Open Credit Enablement Network, which is going to be, I think, very significant. And we have such a network in the UK already. It's called Open Banking. It allows SMEs and consumers to share their banking data with intermediaries and directly with lenders on consent. And this again allows the lender underwriting the party to be able to create innovative product, so more flexible financing that adjusts to particular sectors of SMEs' cash flow cycles or receivables cycles. And also, of course, again, to get greater confidence that you are a party that they should be lending to. And so India is implementing a version of this now, which will significantly, one, reduce the burden on the SME of documentation that's paper-based, which can be complicated and time-consuming to secure. But it will also significantly open up the opportunity to innovate on product and for lenders, again, to get comfort in this sector and to start lending into it consistently on an objective basis. This is extremely important, as has already been spoken about, because GDP creation in all economies, that's irrelevant of developed or developing, is primarily driven by the SME segment. This is where all the jobs are created. This is where real wealth is created. And we need to ensure that SMEs actually do get to participate in that
and avail of these opportunities, and that they get the adequate financing. And so one of the opportunities that comes around with this open credit enablement network is that if you can really share the whole full picture on yourself, you're not limited to going to the highest cost lender in the market any longer. You can go to a lower cost lender. And if you're a high quality credit, meaning your business generates enough cash to support the loan, you've been responsible in your payment history, you have financial discipline in your company, you will secure a better interest rate. And this has been up until now very difficult for SMEs who often have to rely on the NBFCs, who obviously charge a higher rate of interest because they're not deposit taking institutions, and they have to borrow money from the market or from banks. So they obviously pass that cost on to SMEs. Sandeep, you can go ahead. So how do you get yourself prepared as an SME to participate in this increasingly digitized economy? Because it's quickly going to be a case of those who are in the economy benefit, and those who refuse to participate will be penalized. There's some very simple steps I think you can take that offer very large returns. So whether you need a loan or you want an equity investment, the same principles are essentially going to prevail. Or if you want better terms with your suppliers, who are increasingly, of course, as they always do, they pressurize their supply chain. They're not disciplined in paying SMEs on time. They use their muscle to squeeze the payment terms of the SMEs in their supply chain. With data, you arm yourself with power. So if you are not registered as a company, you should get yourself registered as soon as possible. Having the legal documentation in place absolutely overcomes one huge hurdle that lenders will have in order to be able to lend to you. They need to know that you're a legitimate business, you're keeping your shop and establishment license up to date, and all the other compliance requirements you have. If you haven't already registered yourself for online banking, you should do this. This will allow you, first of all, to provide your statements to any one of the players who might be trying to help you, including your lender, which they're going to need in order to underwrite a loan for you. But it also is going to allow you to participate in the Ocean regime, which will eliminate the step of you even needing to download anything, and allow that data to be transferred to the lender when you consent for it to be, in order to process that loan much more quickly. You should be, as a matter of practice, running your business transactions through your business current account. There is a practice within the SME segment of mixing up your personal finances with your business finances, mixing up your personal investments with your business investments. If you are investing business capital in the stock exchange as an individual because you're the promoter, your dividend revenue will not be considered when the bank is looking at underwriting the loan, because the bank is looking at the cash generative properties of the core business, not ancillary activities that the business engages in, and also will consider the volatility of the stock market and not assign those revenues to you. So even if you're declaring them, they're not going to be considered as part of the loan package. And they want to see that revenues come into the bank account, and that revenues in the bank account match the GST filing. So this is absolutely critical. It's not going to be possible any longer for these things not to align. You need to also think about using a payment gateway if you can, or a POS machine, because that gives people access to much more data about the real-time status of your business, how many transactions are coming in. And there are lots of opportunities in the Indian market now to introduce those things at low cost with lower fees. You need to absolutely register for GST if you're required to, and register and file your GST and your ITR returns on time. This gives lenders confidence that you're running your business correctly, that you're being honest in your business endeavors, and filing those documents on time, absolutely critical. And one small tip I'll also give you is that if you make substantial changes to your ITR over a very short period of time, and you file multiple times in a row, this also is problematic, because it indicates that there's not a strict discipline on filing of accounts. So try to avoid doing that. Try to get your accounts in order at the right time and file them on time. So these are just some simple steps. I think there's a huge potential in India for SMEs to become very empowered for lenders to innovate on product. We are definitely here to help SMEs. We exist. Our bread and butter is helping SMEs. We do not charge fees. If you need assistance and handholding in getting a loan from anything from 5 lakhs to 15 crores of secured or unsecured loans, we work with more than 22 lenders in India, several private sector banks, public sector banks, NBFCs, online lenders, and we can help you. So there is help out there. There are parties like us who exist to help you. Reach out, become educated, and get the help you need so that you can grow your business. Thank you so much. If there are any questions, I'm happy to answer them.
Thank you very much, Nadia. I have one question particularly. Mr. Vinod, can you on your video, Mr. Singh, so that we will have one open discussion for the next 10 minutes. Then we can close down because it's like 6 o'clock now. I have a question, Nadia, for you. What is the observation you have, particularly why MSME sector is not getting the loan from the banks, and what is the gap you are finding for particularly to suggest the bankers, both Mr. Vinod and Mr. Singh, and also Mr. Arsu?
Sure. So from our perspective, there are 3 major gaps. One is that very often SMEs are not actually in control of their own financial data. So they very often use a chartered accountant or a financial advisor who will hold the passwords to their GST account, to their ITR account, and will be preparing their annual statements. And they don't have those at hand. They're sitting with their CA. This has become extremely problematic during COVID times, where everything has been under lockdown, where the SMEs have been unable to even provide the documentation that lenders needed in order to underwrite the loan or process the loan or even log the loan into their system. Without basic levels of documentation, a lender can't even log the case into their loan management system. So taking back control of your own documents, it doesn't mean don't use a CA or a financial advisor to help you, but make sure you always have your documents at hand. You can access your data so you can pass it to a lender when they need it from you. Second thing that we've seen, which is highly problematic, is that borrowers don't understand that lenders are not trying to make their life miserable. They exist to actually service them. So when they're asking you for a document, it's not irrational. The request is not irrational. The request is because that document must be provided to the credit committee in order for the sanction to be dispersed, to be issued. So although it may seem a hassle, the documentation is all part of providing assurance to the risk committee within the lending group that this company is underwritable. And if you don't have it, particularly important licenses that allow you the license to operate as a company, it will not be possible to get a loan. The third biggest gap we see is that the dialogue between the 2 parties is broken. And I mean that in that lenders tend to speak in a very technical language, borrowers don't understand the technical language, and something gets lost in the middle all the time. Both parties have good intention. They want to meet each other. They want to do the transaction. But when one says, for example, your accounts should be in order, well, okay, then I, as the SME, think my accountant has signed off on the accounts, therefore they must be in order. But often they're not in order from the perspective of the bank. So a vast amount of education, I think, has to go on to bridge that gap of understanding such that SME can then prepare the accounts in the format that the lender wants to see. But without that, I think we end up with a huge gap in terms of the transaction actually happening, even though both parties want to do it.
Okay. Mr. Vinod, your comments.
Yeah, very fundamental points which Nadia has raised. In fact, I was also coming to the same thing that ultimately it is in the interest of the MSME customers that they have they are more transparent. And I would like to pick from Rajendra sir also that the governance is certainly an issue. It's not restricted to large corporates. It is an issue for micro MSMEs. So they need to look at that so that it is bankers are having more comfort and confidence to help them. So this is one thing which the MSMEs serious attention if they aspire to become big.
Mr. Singh, would you like to comment on this?
Yes, sir. So I would like to share like these platforms which have come up for digital offering. So that is what the data is doing the talk. So in a manner, I think if the data, as ma'am mentioned also, our accounts are kept good. So for example, PSB 59, we have around 18 fintechs onboarding, right from consumer commercial bureau, credit rating agency, banks for the statements, then like digital stamping, penny drop, UIDI, PAN, everything, GST, income tax return, credit guarantee eligibility. So now the idea is that when these promises are available, I think people should increasingly use it for this. Just one more point I would like to add besides this thing was, as Arsud sir was mentioning, in the fund of fund program which is going on for startups, it's a 10,000 crore fund. If we see the breakup of like activities which are getting covered and supported for startups, IT and ITS presently is 18%. Other areas which now are picking up is agri, education, financial services, healthcare. So now there is a good transition happening, as you are visualizing also. And more so, there is a Ministry of MSME Aspire Fund also available of 300 plus crore, which targets the rural and agro segment. So there are these things available. I think the information asymmetry is what has to be really solved out. I think other things can really pick up well. Yeah.
Okay. Mr. Arsul?
No, it's actually a fair point by Mr. Singh about the fund of funds and various other things. But we do all these things actually. But what's important is, like, after doing this, like, in my view, we should put in a proper review matrix. If I'm willing to provide 10,000 crores equity to the SMEs in the country, what is the leverage I would expect in what time frame? So that should be the metrics. So that actually indicates, yeah, the money has gone towards what we had aspired to, and it's actually contributing to the economy. So that's one thing I would like to say. Secondly, I agree with Nadia and Mr. Vinod about actually, like, SMEs. They should take ownership. As they control employees, they should also control the chartered accountants actually who interact on their behalf with the banking system. Empowering them is nothing wrong. I'm not at all against it, actually. But ultimately, the way we control employees, like, we also have to have some kind of ownership and control on what they speak on their behalf, and where the data lies, and whether in the absence of that particular individual or an agency, whether I'm in a position to actually undertake that activity as a backup arrangement. So in the businesses, we put in place the business continuity paradigm and a matrix. So this is what is very important, actually. And SME owner, like, the bankers feel more comfortable interacting with the SME owner purely from an understanding or assessing a management and a promoter risk in terms of, like, assessing the capabilities, competencies, and the character. So many businesses have capacity to repay, but, like, if there is no willingness to repay, so that actually comes from the character. Okay. So those interactions are very, very important for a lender to take that lending decision in addition to the other tools what the lender has. I hope I'm making a point over here, but no offense to anybody over here. I'm just giving my practical feedback, and actually it's in the interest of the whole ecosystem, whether they're lenders, whether they're borrowers, whether they are consultants, chartered accountants. Each one of us play an important role, and, like, each one of us represent their organizations behind them. Okay. And they're governed by their internal processes and risk management practices.
Okay.
So we should have respect to all those things. And that's what I would like to say.
So
Thank you.
just to add one point, we are working out a cadre of counselors along with under guidance of RBI. We call it certified credit counselors. The idea is that these counselors should operate under a governance framework. So which we and that will include the fees. These are all going to be onboarded on the digital platform, where anybody accesses the hand holding and they then help them either finger holding or hand holding right up to Credit Connect. So what we are trying to do is, let's create a framework which is well governed, and the pilot is on, and I think we'll scale it up as it moves forward. Yeah.
Okay. Thank you. I think Vinodji and Nadia has also mentioned about the good governance. Let me give one feedback about good governance system. During the 2008 to 2010, Mr. Bhave was the chairman for SEBI, and that time we have pursued with them for the starting the SME stock exchange. And I was the main key person to encourage him to look into this SME stock exchange platform. But they were not so keen to give this platform immediately. Then I suggested, I know that why the capital market access will not be easy for a SME sector because of the good governance and business ethics. So I have insisted them to include the 49 clause, that is good governance and business ethics is a must to adopt by the SME sector. And through that, the board can be develop properly, educate properly to understand the business growth, understand the business management system, ecosystem to be adapted for the growth and expansion, and particularly to understand the need of market. That is what, and therefore the many SMEs. But now I found that most of the SMEs are now started, as Nadia said, started taking the advice from the charter accountant, the business advisors, even the rating agencies. Even I found that that they are looking for, or they are going for, preparing them for joint venture, technology transfer, even private equity, venture capital, contract manufacturing. Even now, Indian SMEs have started now transforming their business activity. Earlier days, the family business, Mr. Vinod or Mr. Singh must be aware, and Mr. Arsul also aware that, if they started one business, till end of that life of that business will be continued. But now there is a change. And Corona has taught us, Corona has encouraged us to adapt advanced technology, adapt the unique technology, and adapt the unique system for product production, quality services. So I think we are in a last leg of our discussion. But I would like to, before closing this webinar, I would like to have a one sentence suggestions and a message to SME sector, particularly the banking perspective, particularly for the empowerment perspective, and on an expansion level. Starting with Mr. Vinod, what is your one sentence message to a SME sector?
My message to the MSME sector is that they are indeed very respectful fraternity whom the bank would certainly like to support and help and derive the satisfaction in doing so. And today, the ecosystem is quite conducive with a lot of initiatives from the government, the regulator, and various digital enterprises which are coming with very innovative, the fintechs, and these platforms are enablers for them to flourish if uh, they, they willingly try to adopt good financial practices. They can indeed rise to be advisors in future.
Okay, Mr. Singh.
So I would request MSMEs to regularly avail and look forward to Credit Plus services, and that will really enable their next leap or even make them more stronger, because ultimately when economy is looking for Atmanirbhar Bharat, So everybody has to be updated and upgraded, and all continuous. Thank you.
Arshulji?
I would say like governance is key for sustenance in this run. Secondly, I talked about actually a cash flow based lending technology, data, and all this stuff. So it's important for us today in this digital environment. The SME should create a rich digital footprint so that actually like the lenders on the other side or like whoever is on the other side, like who would actually deal with you on a business or a lending transactions can take those informed decisions. So governance and digital footprint are very key, important for the business today.
Okay. We always say the ladies first, but here is ladies last. But you know that one thing, whatever you will say, the people will keep in mind. So your turn now.
This is true. Well, I'd like to end on a message of hope as well. You know, SMEs are going to be the reason that an economy recovers or does not. The pandemic has been so serious that for countries to get themselves back on track, it will be the SME segment. So you should not despair, because you're going to be the reason that India is great. The second thing I would say is I would just echo the same point that, get your house in order, take control of yourself, know where your data sits, rely on people to help you navigate the process. We can help you. There's lots of other people who are around to help. Don't think you have to do it all on your own. And lastly, don't be afraid of debt. Debt doesn't have to be bad. Debt doesn't have to be a debt trap either. If you manage it properly, it can be the key to your successful growth. And if you look at most of the major Indian companies that have become global, they are heavily levered, but they manage their debt well. So don't be afraid of debt. Debt is only bad if you don't have control over it, or if you're taking a loan that's not appropriate to your business. And keep your head up and keep going, because I every day am so inspired by just the resilience and the entrepreneurial spirit that SMEs bring to the table. And I have so much hope that we will get through this year better for it because of the SME community.
Oh, thank you. Friends from the SME sector, on behalf of SME Chamber of India, I would like to suggest and to encourage all of you to take proper advice and guidance from the like a charter accountant, business advisory firms, and prepare your project report, prepare your financial documents, and approach your concerned bank or concerned branch, nearby branch, any public sector bank, and suggest and submit your proposal. I don't think that rather Mr. Vinod and Mr. Singh or even Mr. Arsu, Ms. Nadia will be agree with me that no bank will deny your proposal if proposal is prepared, a viable proposal. And I'm sure that all the banks are sitting there, all branch managers sitting to do business with you. So we want to, reduce the gap between bank and SME sector by encouraging all of you to take advantage. Why government is bringing various opportunities, various platforms, various facilities for you to empower you, to become not only Atmanirbhar for local market but for global market. Since Mr. Singh has already elaborated on the various platform and various facility created by SIDBI, similarly, SME Chamber of India is having their own divisions, by particularly the finance division, export division, entrepreneurship division, business management system division, and where we are supporting the entrepreneurs to go global, grow more, and do better business activity in this pandemic or after the pandemic also. Friends, I know that this pandemic has created very different ecosystem, and the corona has taught us to change according to the situation. And who has played important role? The bankers and medical sector has played very important role. So let me salute the bankers first, because they are putting efforts to empower SMEs, and SMEs are playing very important role to achieve the target growth of Indian economy. Friends, with these words, I'm thankful to Union Bank of India, SIDBI, for supporting our activities, particularly as a sponsor, particularly as a advisor and particularly as a knowledge institution, we want to take advantage to circulate amongst SME sector this advantage and this knowledge, particularly for their business growth. Arshulji, thank you for your participation. I know you are in vacation.
My pleasure.
But even though, since you're a hardcore banker, I know you will not deny to participate. So you're enjoying. And Nadia,
it was my pleasure.
You, technology, the concept of technology, understand, because even there is a disruption, there is a disturbance. That's why we call technology. And you are sitting in London watching Indian banking system here, activity here, and putting a lot of efforts to bring the loopholes from that, and giving education to the SME sector, particularly bringing the bankers and SME sector. Thank you for that services, and I suggest be safe, be healthy, because UK is going in a bad situation now. Lockdown is there, and I'm sure that this corona will be going fast because the vaccine is starting in India already, and UK started. So all thank you very much, Vinodji, Mr. Singh, Mr. Arsul, and Nadia for
Thank you.
participating and sharing your thoughts. All the
Thank
best.
you, sir.
Thank you.
Thank you, sir.
Bye.
Thank you.
Pleasure is mine. Bye. Thank you.
Thank you, sir.
Thank
Thank
you.
you.